Welcome to GP Bullhound's Tech Thoughts, a weekly overview of economic developments in international markets. This is GP Bullhound's Tech Thoughts. Today's the 29th of April, and we are here with Inge Heydorn and Nela Salkovic for our weekly market roundup. In today's episode, they will discuss software, semi-cap equipment, social media platforms, and gaming. But first, a market update from Inge. Over to him.
Thank you, Maria. So, looking at the market for a moment, good news is that the tech companies continue to deliver strong results in Q1, and the market is getting more forgiving towards weakness. So, look at, for example, PayPal, Pinterest, and Facebook, all stocks recovering and bouncing back, although numbers are not great. And even in PayPal's case, they're downgrading the forecast, and in Facebook's case, the outlook for Q2 is worse than expected on the top line. So, if you look at reporting season so far, the positives are the software is continuing to be strong, especially business-to-business software is really strong. Cloud demand is strong with Azure on Microsoft, the Google side, Amazon, AWS, all of them showing accelerating growth, which is really strong in this market environment. On the semiconductor side, the demand is also very strong. There are pockets of weaknesses like PC on the lower end, local Chinese mobile demand is weak, but in general, demand for semiconductors continue to be strong. So the negatives then from the reporting season, weakness in consumer technology, absolutely. Consumer spending is wobbling a little bit, and that's hurting some of the vendors. Internet ads are growing still, but slowing down, especially since the war in Ukraine started, and we have seen another leg down here in the beginning of April, given that we have a lot of uncertainty around the macroeconomic situation. The social platforms are thereby hurt by that, and the ad market is, so to say, holding up, but it's definitely affecting them. On the usage side, the numbers were better than expected, I would say, across the board, but the mix in the numbers are not great, meaning that the Western European countries, especially US, but also Europe, has a decreasing usage on the platforms, while you have emerging markets being strong. And that's a negative mix effect, given the fact that the ARPU is clearly much lower in those markets, and that's hurting the social platforms. Gaming, Nela will get into that a little bit later, but across the board quite weak in Q1. So what are the standouts been then in this reporting season so far? I would say definitely Qualcomm, the guidance of growth of around 50%, although we have a mobile market that is weak. They're clearly gaining shares, and they're also clearly doing really well outside the mobile market and moving their company away from being so dependent on the mobile side. So that's a clear standout. But even MediaTek had a good guidance, and they are quite exposed to the Chinese local names, but they're still doing quite well. So they're gaining share in terms of both the processors and the modems on the phones. The comments from the semiconductor producers in general is really interesting. If you take Samsung comments, for example, that the volumes they are now supplying on leading edge for the last 12 months, they already have 8 times that volume signed for the next 5 years in commitments, which is very interesting. We have been quite active in our trading this week. We have kept our positions in Microsoft and KLA and Google, and so is now over the numbers, but we'll cut the positions in Apple and Amazon, which is quite happy with, given the fact that the performance we've seen on those names at the night. So, going to our portfolio, just to give you some background on our portfolio in GTF before we're moving on to gaming. Semi-capital equipment is still a standout area for us. We think the growth will continue to be very healthy in the next coming years. The order backlogs are growing, and the only problem is the supply side. Will the slower economy hit the semiconductor volumes? Yes, but not investments, as we don't think people will end up in the Intel problems, meaning being behind the curve, not having the latest products, and thereby being hurt long term in their sales, so to say, due to the fact that they have not been investing in the times when they needed to. Social media stocks has bounced back from their on the results, but as I stated earlier, not great numbers. So we continue to stay away from social media stocks for a moment. Gaming, yes, Naila will talk about it a little bit, but just a quick comment is that we're definitely starting to look interesting, like Take-Two and so on, given the valuations on these names for the moment. Over to you, Naila.
All right, so on the gaming side, in March 2022, consumer spending across video game hardware, content, and accessories declined with 15% in the US, which is 1/3 of the total market. And Elden Ring repeated as the best selling game of the month, as dollar sales experienced double-digit percentage dollar sales growth compared to its February 2022 launch. I would really argue that there is a demand for strong releases here, based on this information. Further on, generally the news cycle has been really, really slow for gaming. The upcoming lineup of games, specifically the actual releasing in the next 3 months, seems to be one of the worst summers in a long time. An exception for this is definitely Nintendo, who has a strong lineup. However, looking at PlayStation and Xbox, June, July, August seems like a real slowdown, which I therefore believe will be a tough summer for software sales as well. Um, However, even though Nintendo has a strong lineup this year, hardware seems to have a significant slowdown. When looking at their own Nintendo model, last year's 1Q report shows 4.45 million units sold in 1Q. Comparing to the weekly sales numbers up to mid-April, we can see a significant slowdown in units sold, which could potentially indicate lower reported forecast on hardware throughout current year 2023 for Nintendo, and including the overall drop in sales on hardware from the latest NPD report, where we could see a drop of 24% compared to a year ago. And just a quick update on Microsoft. Microsoft reported their 1Q report this week. I believe the disappointing part here is that we did not get the details that we get from, for example, Sony and Nintendo, because you get a lot more detailed information there in terms of profit margin, unit shipped games, etc. They just give a lot more details on the business. Although we can see some really good things that we can point out, as a whole, gaming revenue grew 6% overall. I wouldn't say it's huge, but it's a steep comparison. Content services grew 4%, which is strong to prior year, which means that Game Pass continues to increase in subscribers, which is really good. And the performance of first-party titles has been really underperforming this year. So despite new big names, the usual games that keep helping the industry seems to be slowing down. Further, I would like to highlight that Xbox hardware grew 14%, which is really good considering shortages. On the earnings call, they mentioned that the past 2 quarters in a row, Xbox has gained global market share. So what does this mean then? I think it means that they're slowly closing the gap with PlayStation 5. They're taking market share, basically. And over time, I see 7% of sales from Xbox content and services. And I mean, considering NPD is showing a downward corrective trend coming off pandemic years, this is pretty impressive showing for Xbox, I would say. So yes, some good stuff out of Xbox. Thank you for today and see you next week. Bye.